One of the main priorities for you and your limited company should be working out the most efficient way to draw income down from your company. This blog will guide you through what your optimum salary will be in 2018-19. Having flexibility over when and how much you are going to pay yourself is one of the advantages of being a limited company director. Most limited company owners take income in the form of dividends and in a small salary. Taking dividends has a huge benefit as you do not have to pay any national insurance contributions, whereas on salaries you do. As a result of this, an average limited company owner might save a lot of money each year. Here are two options to choose from when you're working out your optimum salary level and possibly that of your spouse if applicable. If you are entitled to the full personal allowance and your salary doesn't cross the threshold, you will not pay any income tax. You will also only start to pay employers and employers' national insurance contributions if your salary reaches the 8,424, meaning that this is the most tax efficient salary to draw. There are no legal requirements to pay yourself the national minimum wage unless you have a contract of employment with your own company that states otherwise, although this is very uncommon. This salary is also above the lower earnings limit for national insurance required in order to qualify for the state benefits. You need to make sure that you include any other possible income you already received in the year. A tax-efficient way to pay yourself more than the 8,424 is to claim the employment allowance. This is only applicable if you are not the sole director or employee of your company earning over the secondary threshold. If this is the case, you can pay yourself up to $11,850. First introduced in April 2014, the employment allowance will refund any employee's national insurance your company pays up to £3,000. You will be able to check if you are eligible through your accountant. Paying yourself this amount during the current tax year means that you will pay no income tax at all. The salary is deducted against your company's corporation bill and you'll pay £411.12 in employees' national insurance, and this will be refunded through the employment allowance scheme. Overall, you will be around £250 better off per year as a result of corporate and personal tax savings, meaning you are better off paying yourself an $11,850 salary in 2018-19 if you are eligible. You want to earn more than this minimum salary, and hopefully your company has more cash it can pay you. You will take this as a dividend. A dividend is a sum of money that is paid by a company to its shareholders out of its profits or reserves. There is also now a dividend allowance, which allows you to take the first $2,000 of each dividend tax-free each year. So the optimum way to take cash out of your business is to take a salary of $8,424 and then take the rest as dividends. If you're not the sole director or employee, you're able to take a salary of $11,850 by claiming employer's allowance and then the rest as dividends again.